Hey everyone, Steve here from My Crypto World, and welcome back to this week's episode on the crypto markets. Well, as you would have seen, the market has dropped significantly. Well, not significantly, but enough to worry some investors. It's down about 15%. But what we're going to do is have a look at that, but then put that into context regarding where the market has been for the last couple of months to try and give us a better perspective on where the market might be heading. All that right after this. Okay, so having a look at the market heat map at the moment, you can see where everything's at just as a quick snapshot. Bitcoin down 9%, Ethereum down nearly 10%, BNB down 6%, Cardano down 13%, and Ripple down 10% as well. Solana down 10%, and AVAX down around about 10%. So not looking too good compared to where we were just a week ago. But let's go through and have a look at what that means for us as well. This is just a total today's cryptocurrency prices by market cap. You can see pretty much everything is in the red except for the stable coins being Binance USD and the USD coin. Sheba Inu is still up despite the downward moves for the week, still up 6.75%. It's just moved to 7.15%. But we'll just jump over to our charts now just to go through where things are at. So the market has moved down, as I said in the intro there, and we're currently sitting at just over $1 trillion of total market cap. That's the total market supply of all cryptos combined together. Now, what you've got to do when you're reviewing this and you're seeing the markets drop dramatically is put it into context of where we are in the current market cycle, and keep in mind that the market, since its recent low, is up 53%, and that was back from 18th of June. So not too long ago, probably just over 8 weeks ago, the market has moved over that 8-week period up 53%. Now, anyone who knows anything about charting and investing knows that the market cannot continue to rally that strongly forever. It has to come back down at some point in time. Right at the moment, we are sitting at from its recent high, which is a couple of days ago, to where we are now is around about a 15%, say 15.5% drop. So it's nothing unusual when you have a look at the market cycles in history. So even when the market was really bullish way back here, you can see that for every bullish cycle, the market always pulls back a little bit. It then rises and then pulls back a little bit, and rises and pulls back a little bit. Now, one of the biggest questions I get is, why does this happen? Look, market psychology is one reason. Probably for most, the most answer though, or the most accurate answer, is profit taking. People have got in, they've made 55% return on their money for those, the smart money and the people who are trading in and out of the cryptocurrency exchanges daily. They've had great returns. So what they do is they grab that profit, throw it in their bank account, and because the sellers take over the market starts to fall. Now, it doesn't mean it's all doom and gloom. It just means that you've got to be prepared for this. If you're a long-term investor, most of this stuff won't bother you. If you're a short-term trader or a swing trader, things like that, then what you really want to do is gear yourself up for the next rally that's going to happen, and you've got to have your strategies in place to make sure that you're ready to jump when the market says you've got to, whether you like that or not. Now, the great thing about the market at the moment is it's actually quite predictable. Now, if you will remember, if you go back to my post that I put it a week ago when we went through our market cycles, I actually said we had hit the $1.151 trillion mark, and that, which is this purple line on the screen here, and that is a significant resistance line for the market at the moment. Hopefully it'll eventually be a floor for the market, a support line. But at the moment, because we've been trading under it, it's a resistance line. And if we go back and have a look at this light purple line here, you can see how many times the market moved on top of it many moons ago. And even way back then in January 2021, it was actually a ceiling for it then as well, a support, a stop resistance line. And I said that about 7 days ago that I would not be surprised if the market hit this and then turned back down. Now, if you're somebody who is a trader, an investor, not an investor, sorry, just a trader, The market, so if you do nothing else but look at this, the support and resistance lines within each crypto market itself, each in particular coin, or the market cap as we're doing now, then you can actually make some really good trading and get some really good money from that. I know plenty of traders who have bought in here as soon as the market went above the $870 billion mark and held out, and have recently sold out as soon as it hit the $1.151 trillion mark. It's just understanding the market cycles. What we want to see now is, now I don't know, the thing we don't know is where it's going to fall to. It's not really at a very small resistance line at the moment. If you follow the red line on the screen there, you can see that we had quite a lot of sideways movement around about this price period back in January 2021. So it may pause, find some stability there and move upwards from that. That's really what long-term investors want to see, to be honest with you. But it may still continue to fall down all the way back down to 870 billion again. Now, if that happens, it's actually not a bad thing as long as it bounces off that resistance line and then continues its momentum upwards. Remember, you have to allow for market fluctuations, and you've got to bet on the fact that people want to take profit. That's what a lot of people are in the market for. Let's have a look at a couple of coins now. So let's go to the big one to begin with, which is Bitcoin. Now, Bitcoin never made it to the $28,000 mark. It failed before that. We got about halfway to 25,000 before we've recently come back down again. Now, at the moment, we're still trading above its support line of $20,000. We're at about 21,259 at the moment. So it's got a little while to fall. Now, again, the failure of this, or the falling of this individual crypto, is not a bad thing as long as we see it hitting the $20,000 resistance level and then moving upwards from that. It actually shows great support. So it gives people who have been in the market for a while a lot more confidence that the market bull rally may be commencing. So it's not necessarily a negative thing. Let's have a look at Polkadot as well while we're here. I haven't covered Polkadot for a while, but again, you can see that it came down from its high of $55 all the way down to about $6, and it's been bouncing above its resistance level quite nicely. It's now sitting at $7.45, which if we go back all the way over here to January 2021, we can see it had a small amount of resistance at that price period way back then. So it may be just bouncing off of that, waiting for a while before the rally continues. That's what we would hope. But again, if it falls through that and you're a trader, you've got to be prepared for worst outcome and the best outcome, and where you're going to place your trades. For me, if I was a trader or a swing trader, I'd be waiting to see what happens and see if it drops back down to the resistance level of $6.15. Again, not professional advice, just my personal opinion before I entered back into that market, into that particular crypto. Enginecoin looks very much the same. The good thing with Enginecoin at the moment is we mentioned that it was last week. I think we covered it last week. Might have been the week before, where we spoke about the cycle of this particular crypto. And we mentioned that it was trading well underneath the 77-cent mark, which is its major support and resistance line. It actually almost hit that to the dollar. What did it hit anyway? It hit 75 cents, and it is and 77 cents is its resistance spot. So it hit that and has moved away from it now. So what we want to do is, we want to see something like Enginecoin rally down for a little bit, but then come back up and hopefully break through that. If I was a swing trader, I certainly would not be in that. I'll be taking a short position, but I certainly wouldn't be looking at any long positions at the moment. Now, Ethereum is, it moves so well between the resistance lines. So if you have a look at Ethereum here, again, we've covered this off a couple of weeks ago. We spoke about how it has moved up strongly from the $879 mark, and that it had a major resistance line at $1,688, highlighted here by the orange line on the screen. It traded through that, it broke through that, showed incredible strength, and what's happening now is the stock has just moved back down, and it is sitting right on that mark now. So hopefully that that does not cause the Ethereum does not fall below that. We really want to see some stability with Ethereum and to see it move up from this point in time. Again, always things are easy to view in hindsight. Again, if I was a long-term investor, I'm not worried about this. As a short-term investor, if you're a swing trader, I certainly wouldn't be looking to get in just yet. I'll be waiting for my first green bar after this red bar to see if that shows a turnaround in the market sentiment. Again, you just don't know what's going to happen. There's nothing to stop it from falling all the way through that, back down to $880. And whether that happens or not, we'll have to wait and see. But it's not looking too bad. It's moving so nicely between the resistance lines and using them as support and resistance. So again, it's comforting to see that working. Chainlink, very similar. Chainlink at the moment, though, is moving right on top of its previous resistance line, which I had it. Look, I had this resistance line of $5.23. Where it's trading at the moment is $7.10, which is also a resistance line. You can see here that it moves sideways. It has moved sideways along this price point for quite some time. Even if we go back to 2020, back in July 2020, you can see here where the crypto had moved sideways for several months through that at that price band. So it may be finding some stability around that price before it moves up. Again, time will tell. I thought I'd cover Sheba Inu because I did a story, an article on Sheba a little while ago, a couple of days ago actually, and despite its rally that it's had recently, it's almost back to where it was prior to the rally. But the most important thing is that its trend is still in an upward slope. So it's the lows are still higher. The current low is higher than the previous low, and the current peak is higher than the previous peak. So again, it doesn't signify to me that the crypto is in any trouble at all. It's just the ebbs and flows of the market itself. So if you hold Sheba long term, I think it's got a good future. If you're a trader, again, you'd be wanting to wait for the next signal to buy a long position. There'll be plenty of people making money out of this by shorting this at the moment. Solana. Okay, so Solana's, that's interesting. I'll just move this because that's slightly off. So Solana at the moment is trading at 27 cents, and you can see that 27 cents for Solana at the moment is a major support line. So why is that? Because all the way back in August, June, July, August, September 2021, so nearly 12 months ago, it moved sideways for about 3 months right at the 27 cent mark. So again, it's found resistance based on previous pricing, and it's come back down and is resting on that at the moment. So it doesn't look too bad. And finally, we'll do one more, which is Zilliqa. And Zilliqa, again, we've moved up from its recent low, which will now be a support line for the crypto. But what's happened again, it's moved up. The peaks are getting higher, the troughs are getting higher, and what is happening is it's sitting at right on 3 cents, 3.7 cents at the moment, which again, if you follow the red dotted line, is a major support line for this particular crypto. So everything that's fallen in the market happens for a reason, but it's really interesting to see that the fact that most of the cryptos out there in the marketplace, the good ones, the ones who have got a lot of stability about them, have really fallen back to a significant resistance line. So it's just a matter of waiting to see where things go from here. Now, I did have a news article I was going to share with you, and that was this one from the Daily Hodl. 5.1 billion crypto hedge fund CEO says new rally is coming. Ethereum and altcoins set to outperform. So Pantera Capital CEO Dan Moorhead thinks the crypto market has passed the bottom of the cycle and is about to start rebounding. Bitcoin, kind of like the treasury equivalent of our space, and everything is kind of high beta to that. In times of stress, Bitcoin goes down less than the micro caps, or whatever you want to call the altcoins. It just goes on to quote, I actually think we're past the bottom. If we're in at the minimum, a consolidation level and potentially a new rally, which I actually think we are in, then it does pay to be out. It does pay to be out that risk curve to be in Ethereum, DeFi, which is decentralized finance, and a bunch of other things. And now we've taken Bitcoin exposure way down. We're back in all the other sectors that can perform well if we're in a bull market. Obviously, he says, if we're wrong and we have another leg down, we're going to be wishing we were all in Bitcoin, but the other things have a high beta basically. And our high beta asset is one that's expected to be riskier, but it provides a higher potential return. So interesting from a very large crypto hedge fund there about his thoughts on where the market's at. I've got to admit, I think the market sentiment's quite strong. I think there's a lot of bad news articles out there that don't really tell the whole story. That's why I look at the news articles. I try to pick the ones that I think give the true market sentiment based on what the charts tell me. So at the moment, I can say, in my investment opinion, the market does not look that sick. It actually looks quite healthy, and it's just a matter of waiting to see where it rallies up from here. That's it for today. I hope you have a fantastic weekend. We'll see you in a couple of days when we cover off some other news articles. Take care of yourself and each other. Again, if you could give a like, a thumbs up, and a subscribe to us if you like the content of the channel, and if you don't like the content, certainly put a note down below and I'll see you and let me know what you'd like us to cover. Okay, cheers everyone. Have an awesome day.